My name is Rudi Fronk. I am the co-founder and CEO of Seabridge Gold, a publicly traded company that trades on both the New York Stock Exchange and the Toronto Stock Exchange. I've been in the mining business for over 40 years, the last 25 years running Seabridge.
Lovely to meet you, Rudi. We've never met or spoken before, so maybe start off and give us a bit of a background as to what you've done in the past.
Yeah, so in my career, I built mines in third world countries. I've had mines I built expropriated, learned firsthand how real political risk can be. In 1999, my colleagues and I, with the gold price at 260, believed that the gold price had a bright future in front of it. And our goal was to create within a public company, a company that would outperform gold and other gold equities as the gold price went higher.
And tell me more about that. Where else have you worked? So was it all been predominantly North American?
No, Central America, South America, Africa, pretty much global.
Okay, great. And have you kind of brought the band back together? Is this a case of you still working with some of those people that you worked with before?
Yeah, some people. We have a team of very talented individuals, most of which were involved with much larger mining companies with large projects around the world.
Right, okay. Well, let's start with the kind of portfolio, and then we'll kind of maybe in priority order. Obviously, KSM is much in the news. Is that deemed your flagship?
Absolutely. It's a project that we've now spent a little over $1 billion Canadian on since we acquired this project from Placer Dome in the year 2001. It is the largest undeveloped gold and copper project in the world in terms of reserves and resources. It's a project that has successfully gone through the environmental assessment process with permits in hand. It's a project that has the support of the indigenous people in and around the project as well as the local communities. And it's a project, when you look at it, it's going to be multi-generational, producing a lot of copper and gold over decades and decades and decades.
Right, and let me kind of get to and we'll come on to, I'm sure, some of the other assets in a moment. But you talk a lot about the fact that you like to grow the ounces in the ground faster than the shares outstanding. Why is that a measure of success for you?
Well, it's all about providing optionality and leverage to the gold price. I'm not a big fan of our industry in terms of capital allocation. If you look at our industry, how much money is wasted in terms of shareholder dilution without creating value. So one of the guiding principles from day one at Seabridge was the idea of growing ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide to our shareholders on a per share basis, the better our share price should do as the gold price goes higher.
Right, but that's predicated on getting it out of the ground, right? So if I look at your share price over the last 5 years, let's say it's gone sideways. Is that because it's in that kind of valley of death development phase for your flagship? Or is it the fact that the gold price wasn't doing too much either? I mean, how do people judge that phrase of growing ounces in the ground faster than the shares outstanding if shares aren't moving?
Well, I think, unfortunately, that's the industry, the entire industry now. If you look at gold equity valuations relative to the gold price, gold stocks are as cheap as they've ever been relative to the gold price in my 45 years in the business. It's not just Seabridge. We're in a world now where the Western investor is totally underexposed in terms of gold exposure, whereas the East continues to buy physical gold, which is why the gold price is at all-time highs, whereas gold equities are trading at a half to maybe a third of what they should be on a historical basis.
Right, and so how should people judge? And I'm going to stick with KSM because it's a big project. It's the economics look good in terms of the feasibility study, etc. In fact, why don't you remind us about some of the economics, some of the numbers we should be looking at?
Yeah, so we did a pre-feas in 2022 that, capturing about 20% of the known resource at KSM, gave us a 33-year mine life, averaging over 1 million ounces of gold production a year, 178 million pounds of copper a year. And if you looked at the all-in cost of production for this project, you're looking at about $600 an ounce of gold produced with copper at $353 as a byproduct credit. So the industry today is making gold at about $1,500 an ounce. All in, this project will be well below that.
Right. Okay. So once it starts coming out of the ground, the gold, the copper, silver, you'll be making decent margin for sure. So the process of getting it out of the ground is going to be quite important for you. Where are you with the economic study phase now?
Well, that is the $64,000 question. You asked the question, why is our share price not done much over the last 5 years? It is frustrating with all the progress we've had at KSM. I think a lot of it has to do with, we've made it very clear some time ago that KSM will require a major mining company as a partner to develop the project and actually take ounces out of the ground. And we've been talking about a joint venture for a number of years. It has not yet happened, which I think is why our shares are doing what they're doing. And when it does happen, I think there'll be a significant unlocking of value very quickly in the marketplace.
Right. So what's it going to take? Sometimes projects get too big and that kind of reduces the available pool of people who want to kind of step in here. So, how many people are you talking to, and, are you going to be able to advance those conversations, next year?
Well, yeah, we believe so. So we hired RBC Capital Markets a little over a year ago to run a formal joint venture process. And you're absolutely right, Matthew. The universe of potential partners that can build this mine is quite small. We were focusing on 6 or 7 of the world's largest mining companies, both in the gold space and the copper space. One of the risks that was still out there up until recently was that the permits that we have in place now, the environmental assessment certificate, was set to expire in July of 2026. Fortunately, in British Columbia, there's a concept known as substantially started, that if you get that designation, the permits are then good for the life of the project. So over the past 3 years, we've been diligently working on advancing the project through early site construction. In January of 2024, we filed for that application, and we did receive that designation in July of this year. So I think that was the last piece of de-risking that we needed to do to bring a partner in now to co-develop the asset, and that's our focus today.
Right. Okay. But you have you've got First Nations support, but not all First Nations support. You've got the Skeena Wild guys, and you've got another group who's I won't even attempt to try and pronounce. Are challenging that. So. Have they got a leg to stand on?
Actually, they don't from a regulatory process. Skeena Wild is not a First Nation. It's a group that's obviously looking out for fish in southeast in British Columbia and Alaska. All the work we did on here is focused on actually fish and water. We've actually went through the process successfully with interaction from Alaska through the entire process. There's another group called the Sawat that's challenging the decision by the government on grounds that they were not properly consulted during the process and that the government's decision was unreasonable. In fact, all of these groups were properly consulted by the government throughout the substantially started designation. They had an opportunity to opine on the application and their thoughts, and the government saw fit to give us this designation anyway. I should point out that in support of our application and the decision, we have the Niska Nation, we have the Tahltan Nation, we have the Gitxsan hereditary chiefs, and by the way, the Skikamaha are a WILP within the Gitxsan Nation, so they're already part of a group that already supported the project. We have the town of Terrace, we have the town of Smithers, we have the town of Terrace. I mean, Skeena Wild and the Southeast Alaska group is actually making the application on behalf of the citizens of British Columbia. The citizens of British Columbia support the application and the project and did so in writing to the government. These groups have to show that the government was unreasonable in their decision. When you look at reasonableness, support of all the First Nations that are impacted, support of the local communities, the work we did on this, we spent $444 million specifically on early site construction to get this designation of substantially started. Far more work than any other project that was successful in terms of getting this designation. We believe we're on solid ground. The government, I will tell you, they're on solid ground as well, that they did all the proper consultation throughout the process. So these petitions have been filed, but I think we're in pretty strong position that they will not be awarded.
And I guess more importantly, in terms of the conversations that you are having or hope to have, do those groups believe that you're on solid ground, or do they need to sit back and wait and see?
I'm sorry, which groups?
Well, you said you're talking about strategic partners potentially, having to come in and fund this thing, right?
I mean, that is the $64,000 question. Will these petitions impact our joint venture discussions? What I can tell you is up to this point, in fact, they have not. Dialogue continues. It's been out there for several weeks now. Obviously, we got out in front of this with our potential partners, bringing to their attention not only the petitions, but why we believe the government and we are on solid ground. And as of today, it has not impacted our ability to move forward in terms of joint venture discussions.
Right. What it has done is halted what has been, quite a good year for you in terms of share price appreciation. Like I said, it moved sideways, 4 years previous to that, but it's stopped that momentum there. And if you are talking to strategic partners, it's going to be, and any deal is struck, it's going to be done in relation to the value of the company. So you'd ideally want this challenge resolved, presumably. I mean, so how long does that process go on? Because that'll affect your multiple or the outcome from your multiple.
Yeah, look, I think our recent share price performance has more to do with sentiment going out of the gold space. Our share price was doing remarkably well up until recently. Actually, we got through $20 US, $28 Canadian. And then unfortunately, Newmont came out with third quarter numbers that disappointed the market. Their stock was down 15% in one day. The entire air that was going in was let out of the gold equity market, and all gold stocks have suffered since that time. I don't think that these petitions have had a big impact on our share price. I think it's the market environment itself that has impacted our share price.
Right. Okay. So give me a sense of like how much more money, how much more time do you expect to expend on KSM specifically? Because you've got to take it to a point where you think someone else will want to pick it up. You've got to give them enough data. So what does that look like?
Well, I think the work we've done here clearly demonstrates a very robust and viable project that is permanent with support. In terms of what we're focusing on now is one of the big benefits we have at KSM is the government spent over $700 million extending the power grid, bringing cheap hydropower to the district. We have contractual agreements with BC Hydro for 245 megawatts of power. They're actually building our switching station there that will allow us to take power off the line and into KSM. We'll continue those activities. We'd like to have line power, cheap hydropower to the site as soon as we can. That work will continue with BC Hydro, as well as looking with the partnership discussions, what else should we be spending dollars on to make the project that much closer to a construction decision.
Okay, so back to the money component of that. So do you need to raise more money? Do you need to spend more money to move this KSM project to a point where you think it's sellable?
Yeah, we typically spend a lot of money every year on KSM. I mean, we spent over $1 billion already on it since day one. We try to, when we look at, our need for proceeds or funding, we also look at, our corporate objective of offsetting dilution with accretion in ounces. For example, in 2024, we had a budget of about $100 million to spend on KSM. Fortunately for us, we found over 12 million ounces of new resources that were defined over the course of the year. We also have an ATM in place that allows us to go in on specific days or days that we think are good in the market to raise dollars. And we continually use that ATM as a way of refurbishing or replacing dollars we do spend. We've been at this now for 25 years. I think what I'm most proud about is over the 25-year period with the asset base we put together, we only have 92 million shares outstanding today. We have 180 million ounces of gold in all resource categories. We have about 2 ounces of gold per common share in the ground. Show me a company that's been able to do that over the long haul with that many ounces, with that little dilution. We are very, very careful on our capital allocation.
I guess the question people are going to want to try to understand is, a couple of questions here, is if you do find a strategic partner and they do come in, deals structures can take a multitude of different routes here. But if it's a complete sale, having looked at the market recently and the way that deals are priced, we saw, Agnico has done a few deals, most recently with O3. It was a premium to where the company was at, but where the company was at was not a very good place. How do you get the best value on a if it was a complete sale deal at today's kind of price? You spent $1 billion plus, wherever you think you are with enterprise price today, how do you get the best multiple from that?
Well, first of all, we're not going to sell the company at today's valuation. Rest assured of that. Insiders own well above 20% of the shares of this company. I know I've not been doing this for 25 years to sell at today's share price plus even a market premium. Our ask on a joint venture is actually a bit creative. Where actually our share price and our market cap doesn't come into play. So we're asking the partners that it's a 2-phased earn-in. Phase 1, they will come in and sole fund and complete with us, working side by side, a bankable feasibility study over the next couple of years. And for that, they will earn a minority interest in the project to be negotiated. And then at the point of bankable feasibility comes phase 2. They have the ability to go from a minority interest to a majority interest. We recognize that whoever is going to be our partner here is going to want to have control of the asset at some point in time. So at bankable feasibility, they'd have another period of time to elect to make a construction decision, to go out and secure at least 50% of the project's capital through some sort of project facility or other financing structure to the benefit of the joint venture, and then continue to sole fund another agreed dollar amount that will take them from their minority interest to majority interest. So what we're trading at today, what our share price in, doesn't matter. It's what do they see the value of the asset going forward with their involvement in it, working towards a majority position.
Right, and so why get them involved at BFS stage? Why not finance it yourselves? And I guess get more of the upside would be a cry from some of your shareholders, I'm sure.
Yeah, great question. But the fact is that these big companies, they don't want to rely on a BFS that's done by the junior. They want to be involved in that process from day one. So the nice thing about our structure is, okay, you're going to fund bankable feasibility, but we're going to work side by side to make sure that what's going into that bankable feasibility is what you want to see and what we want to see.
Right. Okay. And you're talking about a 2-year horizon for that process. Obviously, and we've got to work out when that process could start, because you've got to select someone or you've got to agree with someone. They want to do that. Is it safe to assume sort of next year is all about getting that partner on board?
Yeah, if not sooner. I mean, we are working today with a number of companies. I'd say we have what I'll call 3 finalists in the running based on the discussions we've had, each of which have the technical, financial, and social wherewithal to build the mine. And hopefully we can transact with one of them over the short period of time to bring them into the tent and move it forward. We're ready to go into bankable feasibility, and we've had these discussions with our potential partners. We've gone out and canvassed the big engineering and construction firms in terms of availability of people, the work that would be done, who's available on your team, and then how we would supplement that from our side. So if we have a partner willing to step in and commit to the project tomorrow, we can press the button today on bankable feasibility.
Okay, great. Do you mind if I just quickly look at the rest of the portfolio in terms of where value lies? Because again, there's a bunch of optionality on the table for you, presumably in terms of monetizing one or some of those. What would you point me to in terms of things that could have some sort of monetary liquidity event available?
Yeah, I'd say that probably the next one for that would be Courageous Lake, an asset in the Northwest Territories that we just did an updated pre-feas on that earlier this year, showing a project that has a 12, 13-year initial mine life, producing a little over 200,000 ounces of gold a year at an all-in cost of production of about $1,000 an ounce. We're not getting any value to our shareholders for that asset today. We'd like to get value to our shareholders, and we're actually looking at what is the likelihood of us being able to do some sort of transaction in the marketplace to generate value to our shareholders. That could be a joint venture on that. It could be the outright sale of that. It could be selling a stream on that. So there's lots of different ways to unlock value in that, or perhaps even spinning that asset out to our shareholders in a separate public vehicle. So, and we have not been, remiss in terms of looking at opportunities over the past to sell non-core assets as a way to fund the projects that we can drive value on. Since day one, we've generated over $75 million in cash sales proceeds from non-core assets. Never fall in love with an asset. If it's not adding value, find a way to get value back to your shareholders and move on to the ones that do add value. And that's been our mantra now for 25 years.
Okay. And tell me a bit about Iskut.
So Iskut, we bought when the gold market cratered after 2011. By 2015, gold had gone from 1,900 to 1,000. We took advantage of that downturn in the market and went out and bought a public company called Snip Gold that had 100% interest in this Iskut property. We see Iskut as another potential KSM. In fact, last year we drilled 3 exciting intercepts at Snip North, 300 to 500 meter intercepts from the surface with good gold and copper grades that kind of are very similar to the reserves we have at KSM. We see a lot of opportunity to go after yet at Iskut, and we will continue to explore there and then decide what's the best way to unlock value in terms of either the sale of that joint venture or some other mechanism.
Right. Okay. So a lot of options on the table. Well, look, as a nice introduction to Seabridge, I appreciate you making the time for us today. It's not one we'd kind of looked at previously. What are your thoughts on, obviously, gold market has done exceptional things this year in terms of price, done a lot of heavy lifting for a lot of people. Development companies, however, not quite seeing a reflection of that, whilst producers make out like bandits, it seems. So do you think that's going to follow a similar pattern next year?
Yeah, I think the gold prices can continue to go higher. I think the rest of the world is looking to get out of the dollar. And as they sell government debt and bonds and treasuries, they're actually putting a portion of those proceeds back into gold, which is why the gold price has done what it's done. What's missing right now, though, is the Western investor in the space. Those that are buying gold today do not buy gold mining stocks. The Western investor is typically the one that comes in and buy gold equities, and they're not buying gold equities right now. I think bringing them back to the table, looking for exposure to gold, is what's going to drive gold equities, much higher than what they're trading at today. And we think that's going to happen in a short period of time in front of us.
Right. Okay. I mean, we sort of recently put out an article about some of the challenges ahead for Canadian mining. Do you feel that like the government, I mean, provincial and federal, are there for you when you need it? How's your working relationship been with them?
Well, we wouldn't have our environmental assessment certificates both provincially and federally if we didn't work with them and they weren't in our quarter. But, you have to do it right. You have to design projects that stand up to the scrutiny, not only of governments, but also First Nations and other affected peoples. And if you're not willing to do that, you're not going to get your project approved. But it takes a lot of work, and it takes a lot of money, and it takes a lot of time. That's just the reality of it.
Right. Okay. And anything else that you point to? Like some people like to sort of blame, the Fed. Some people like to blame naked shorting. Is this a case of like control what you can control and get your head down, or again, does Canadian mining need help?
We need investors to come back into the space. One nice thing about being a company with a Canadian asset, the weaker Canadian dollar actually helps Canadian projects because most of our revenues are still in U.S. dollars or our costs are in Canadian dollars. We recently run some sensitivities at KSM showing not just the impact of a weaker Canadian dollar, but also the impact of higher metal prices. We're looking at an NPV that jumps from over $6 billion after tax to probably about $14 billion using spot prices.
Not bad.
It's always nice to have help from the government, but you've got to do the right things yourself.
Rudi, thank you very much for your time today. Please stay in touch. We'd love to see how you get on next year. Appreciate your time.
Matthew, appreciate the opportunity. Thank you.